Okay, we are live. And it should take a little bit for everybody to click in. But you came on just fine, so. Now, a lot of these, I think, here in the beginning will be basically you and I talking, and then we'll, record it and put it out there on the channel. That way people can watch it in the future. Because they're not going to be used to this 8 o'clock on Monday nights, but they will get used to it after, 6, 7, 8 times. Some of these, we have somebody new on. And hopefully the live chat's working. Whoever jumped on, would you just give us a shout out if you can hear Pat and I just fine? I'm hoping that everybody can hear us just fine.
I'm hearing you real good.
Yeah. And I'm hearing you just fine too. I'll put a note in here. I heard from other people that they were having a little trouble with StreamYard, especially with the audio. They were having trouble with the audio coming through right.
Oh, I thought that was a public. Never mind. I thought that was a public one. It's not. It's just you and I.
Oh, here's Jan Villadora says, yeah, I can hear you guys just fine.
Yeah, very good.
There you go.
Mr. Doi Doi.
Mr. Doi Doi. Hey, Jan, what's up, man? You can probably hear me just fine. Go ahead and type in another note. Like I said, a lot of these first videos, until they get used to it, it's going to be at 8 o'clock on Monday night Central Standard Time, will be probably not. Honey, can you turn that off? You can probably hear that washing machine, can't you?
Goodbye. A little. Not really much. Yeah.
Okay. Pick the first perfect time in 3 days we've been in quarantine to run the washing machine. But
I don't hear it. You sound good.
Good. Well, it's turned off now. Okay. Well, let's go ahead and get started. That way we can do this recording for everyone who's going to jump on and watch this later. Pat, we had a lot of views over the last one for last week, but it really happened a lot after the interview was done. So probably be the way it's going to go for the first month or two as we do the live streams. They'll pick up and they'll start jump on at 8 o'clock with us. So for anybody watching or watching here in the future, my name is Rich Dickey, and this is Trading with Rich. This is a channel about foreign travel. We're over in Cebu, Philippines this week, and it's also a channel about how to trade stocks, how to do calls and puts, and all the different ways that you can do that. My good friend Pat Herbert is on the channel with us. Say hello, Pat.
Hello there. How's everybody? I'm coming from Aurora, Illinois, the same place as Wayne's World. So there you go. But I'm not in the basement.
I did not know it was Wayne's World. Wow.
That's correct. And I can finally officially say to you, my Ayun Buntag, which is good morning Visayan. And you're in Cebu where they speak Visayan.
Oh, and that's the truth. Well, you should see outside, Pat. The streets are dead. I don't know how large Cebu is. Maybe you could Google for us while we're talking. But my guess is probably I'm just guessing 5 million, maybe five.
It's a pretty good sized city. I'm not sure, but I mean, yeah.
Well, when you look outside this, when you look outside, now, Shell, we picked up somebody. We've picked up somebody else on the channel. Welcome, whoever jumped in. But when you look outside here, it's a beautiful day in Cebu. I know you can't see an awful lot. Nah, I can't see anything. But when you look down at the streets, it feels like Dawn of the Dead. There's nobody walking around. Now you can see a few motorcycles and some cars traveling the streets a little bit, but it's like one car every 30 seconds in a major city that's probably the size of or at least half the size of New York.
Well, Cebu City itself is about 1 million, but then there's everything around it, all the conglomerates. But yeah,
all around it, yeah. Well, I know they have different numbers from Manila. I've heard 12 million. I've heard 18 million. So I think a lot of times it depends on whether they count, Quezon and Pasay and all these other areas. But Pat and I have known each other for about 8 years, and the reason why I like to have Pat on, especially in the beginning here, is I like to have a guest who actually, is not an expert in trading stocks, but he is picking up on it super fast. He's learned the terms. He knows what a call is, what a put is. He can even look at the screens on Tasty. Tasty works with me and understand, how we're doing these trades. And it gives me a good measure to see how people can pick up on things. Plus, I can get to be a little boring and I get to be a little monotone. And I like to have Pat jump in there because he's got some great jokes.
He's just trying to prove that he can truly teach anybody how to do this, even me, the village idiot. So there you go.
That's right. You still haven't put in a trade yet, have you?
No, not yet.
Okay. Well, we're going to do that.
We're going to do that before you left. So now you'd have to show me how.
And I will. You'll have no problem with this. But I know a lot of the people are jumping on to see the trading part of the live stream, and I'm watching the comments over here to the right. At any time, I've already got somebody saying they're willing to learn, they're ready, they can hear me just fine. We should be able to go into the online broker and make a few of the trades, but I'm going to kind of explain through a Word document I put together what the 3 different company transactions we set up for this last month, something that we can learn by. And in the beginning here, we're just going to talk a little bit about the trip from Chicago to Cebu. So this was the tale of 2 cities. As some of you might know, I actually traveled. Did we lose you, Dodoy? Seeing if my software is working right. See if Dodoy responds because it shows we lost him. But anyway, when I traveled back in April, I had some problems with the immigration when I got to the last step, and they turned me around and sent me back to the U.S. I'm going to tell you what happened in Cebu, and what's amazing is how much different it was. So, first of all, the flight was great. We didn't have any instances. We're flying with my mother-in-law, who's 85 years old. We call her Mama. And my niece, who's 20 years old. And they are over in the next room beside us here in Cebu. We have adjoining rooms. We can't see them or be with them, but we can put food out on the chairs in between the room and share stuff. Luckily, we've got a nephew here who's in charge of the quarantine, and he's doing a great job of just checking in on us. He went to go get me some snacks. Right now, Pat, I've been eating these Filipino meals 3 times a day. They're pretty good.
Yeah. Oh, yeah, they are.
Yeah. And I'm getting used to the rice. I know I've always liked rice, but I never ate it 3 times a day. But I'm eating it 3 times a day now. And yeah.
You can hear Emma,
so then
didn't you?
Yeah, I heard Emma. You got Elma here laughing too. But I am eating rice 3 times a day, and I'm mixing it up with my ghost powder. I did open up my powder that I got on Amazon, that ghost powder. So now I've got the scorpion. I've got the scorpion tail, and I've got the Carolina Reaper, and now I've opened up the ghost pepper. boy, I tell you what, this stuff will clean you out. It's very, very potent. You have to be careful how much you use.
You are the
Yeah,
Boomong Americano.
exactly. And I know how to mix it with rice now, so
Yes.
it's turning out pretty good. But anyway, uh, we were traveling with about 12 bags. And by the way, Elma, come on over here for a second, please. Um, we're we were traveling with about 12 bags. I think, what do we have? Six. This is my wife, Elma. She looks an awful lot like his wife because Emma's downstairs. And if she comes up and says hello, that'd be great. But they are twins. And hello, say hello, Elma.
Hi.
So what
Good
part of the,
morning, good evening.
so Elma's going to be the photographer, and she's going to be the Philippine. Oh, we can hear Elma's sister. I think she's yelling at us from downstairs. But anyway, Elma's going to be the one that puts a lot of photos out here about the Philippines as we travel around to different beaches and different resorts. We're going to show you what the Philippines is all about. She grew up here in Cagayan de Oro with Emma their whole life. Emma came over a lot earlier than Elma did, but my wife came over in 2011, and now we're going back to Cagayan de Oro to live here most of the time, and still, retain a residence in the United States also. But Elma will jump in and out, and
Bye.
she's saying bye.
And of course, the whole point is you can still trade and make money from the other side of the planet.
You can.
Yes.
This is a great part-time job, trading stocks, as Pat says, from the other side of the planet. I mean, we've got a Wi-Fi, like one of those little Verizon boxes, Pat, that it's a, what is it, Globe, honey? And I believe Globe might be a part of AT&T.
Right.
I'm not sure. Is it part of AT&T?
I
Anyway, it's Globe and Sun, and we have a hotspot box that we can take to the beach with us, and this thing's fantastic. It picks up signals all over the country. Is Emma trying to say something?
she was just talking about Globe, just kind of the same thing that you kind of mentioned a moment ago.
Yeah.
But yeah,
So
they work terrific. I mean, you can communicate everywhere, but yes.
You can. And even with Magic Jack, my 630 number, my Chicago number, is working fantastic. I'm calling people and being able to talk, here in the hotel room. I paid $150 for 5 years, and I used it for years before when I used to visit the Philippines all the time, and it always worked really good. So we went ahead and set it up here. Used it for about 3 years. When we were over here when I was over here 3 years ago, we used it. It works fantastic. But I just had a talk last night with somebody at 11 o'clock. Had a meeting with someone at 10 o'clock Central Time, and it came through perfect. He couldn't believe how clear it was. I said, well, we've got really good Wi-Fi here. And at the hotel, we have really good Wi-Fi. At the house, we have really good Wi-Fi. So it's crystal clear.
Better than you did in the Chicago area.
Yeah, it kind of got a little flaky there with Xfinity in Chicago.
Yeah.
Oklahoma City, when I was down there and down in Longview, I always had pretty good internet. Didn't really have anything buffer, but every now and then you get into some areas, or maybe you're a little too far away from a router. It's expected with Wi-Fi. It's not always 100%. So the flight went well. We had a lot of bags. Mama was in a wheelchair most of the time when we got off the plane and moved around. They were so sweet. They would grab her and make sure that she was comfortable and going between in between the gates. And when we went through immigration, they moved us right along the side and let us go through with the wheelchair people. They were super sweet. Now, here's the part that got me, Pat. You know how Pat knows the whole situation, what happened in Manila. Yeah, and I have congestive heart failure, so I get a lot of edema. I got a little water in my legs and stuff. And last time when I was in Manila, my legs had swollen up so bad on the flight. My cardiologist told me only take one flight, at least once every 3 months. Don't try to go flying too much around, especially long flights. Now, short flights, no big deal. But long flights, what is it? The cabin pressure that causes the water to go down the legs?
Well, and you're just sitting still. You're not moving.
Yeah, you're not moving. So I moved a lot on this flight, walked around, and it came out pretty good. Well, last time, first time I've ever been in an emergency room for myself ever when I got back to Chicago and I flew that round trip in 24 hours. That was not good. But this time I get off, my feet are feeling great, my legs look good, and I'm like, well, I'm feeling pretty good. I hope I don't get turned around again. And we went through all the different things. We got swabbed. We had to take the swab test when we first got there to Cebu. They said to do a swab now, and then we do a swab again after 7 days. And we're on our third day of being in Cebu right now. So at 7 days, we'll get another swab test. And then they said they'll give us results and we can leave after 10 days. So we'll be leaving on August 10th. But that all went fine. The swab test went fine. They didn't stick that darn thing so far up into your brain that you could feel the swab hitting your eyeballs. Not at all. They just gently did it. It was really good. And then here's the big surprise. I get to the last gate where the immigration officer is, and Elma hands them all the paperwork. We've got our marriage certificate. When you're flying with your wife, you need to still have the marriage certificate with you. Yeah. You should have the report of marriage, which they call the ROM in the Philippines. You should carry that also.
But I think they're never going to believe that those ladies married us. That's why.
Yeah, really, that's what it is. I mean, we're way out of our league. But anyway, after the ROM, I think the thing they spent the most time with was the dual citizenship. They matched those up between Mama's dual citizenship. She's 85. She's got dual citizenship. Elma has dual citizenship. Dai, our niece, who's almost 21, she doesn't. So she had a Filipino passport. And they wanted to make sure we all lived in the same place, Cagayan de Oro. Gave them our address. That all went fine. But when they looked at those dual citizenships, they wanted to see the oath of allegiance and they wanted to see the dual citizenship papers. So Elma laid those both out. They kind of went over it with a fine-tooth comb, and they watched these dual citizenship papers very closely. So they took a look at all that. Obviously, the marriage certificate from Kendall County in Chicago. The actual, we're picking up a few more people here as we talk. Welcome, everybody. We're just discussing the trip to Cebu. We'll get into trading in just a few minutes. I was real happy. I was saying nothing because I did not want to upset any immigration officer, not after what happened last time.
Well, and just for the record, last time you did everything correctly. You followed what the consulate in Chicago told you to do. You got the visa. And when you got to Manila, they decided, nope, this isn't what you needed. You have to go back. So it was a little bit of a backstory for the other folks. Yeah.
That's right. So my next point was exactly that. When that immigration officer came out from behind the counter, I thought, uh-oh, because last time, as Pat said, I got 2 visas. One had expired, and it's called a spousal visa. And I know you can't travel without your wife, but I asked last summer what I should do in case do I need to bring my wife back to the U.S. so I can travel with her, or can I, fill out some kind of paperwork and get a visa? And they said, we'll give you a visa. So they gave it to me. I did everything they told me to do. And when I got to Manila, they said, no, we don't even know what you're talking about. They didn't even open up a passport. I kept trying to open it and show them that, hey, it's from the Chicago consulate, Philippine consulate. It says visa spousal exception right on it. They slapped that thing closed and told me to, I won't even go into all the explicits that immigration officer said, but I just backed off because in the Philippines, you don't want to confront anybody over anything. They want to save face. If you say anything, you're going to be, government officials are not people to argue with in the Philippines, especially as a foreigner. Now, if my wife had been there, it would have been a whole different story. She would have been yapping at them pretty good, but I didn't. Right. And maybe she would have got me through, but I didn't get through. So the immigration officer came out from behind the counter, and she came out of the booth and walked straight up to me. And I thought, uh-oh, is this where it goes bad? And she opens up my visa, and she has that spousal visa exception inside my passport that they had glued to one of my pages of my passport. And she says, sir, I hope you don't mind, but this visa that you have, and I thought, uh-oh. She goes, this visa that you have is the visa spousal exception. And we're really glad that you got it because you're trying to follow the rules, but you don't really need it because you've got your Filipino wife with you. And I looked at her and I almost dropped my jaw like, yeah, that's exactly what the whole problem was last time. And she said, we can use this visa. It's still good. But if you don't mind, we'll go ahead and change it from a 59-day spousal exception visa to a 1-year visa. And I said, whoa, you're going to give me a year? I don't have to go down to immigration, at the 30-day and the 60-day mark, and then that 6-month mark and the 1-year mark. She says, no, we'll give you a year. I said, well, great. That'll give me time to go ahead and do my permanent resident visa, which I'm going to start here in Cebu, and then I'm here. And I am going to become a permanent resident here. Not going to become a dual citizen, going to stay a U.S. citizen, but I am going to be having, the ACR card along with the permanent resident and go that route since I'm married to a Filipina and I can, do the Balacaban status. So I was just, I mean, I didn't know what to say. I was speechless. My wife was like, "Oh, you're so nice. Thank you very much." And they're like talking, Visayan to each other and all happy and giddy and whatever. And I'm thinking, this is an immigration officer, and she's so nice and so helpful. Anyway, she stamped my passport for a year. I'm good to go. What's that, Emma? Elma?
Actually, Cebu immigration is, airport is so nice than Manila.
Yeah,
Manila
actually, Cebu
security
Airport
already,
is very much nicer than Manila. I've never had problems going through Manila. That was my first time. I've been through there 13 times before. This is my 14th time coming into the Philippines. I've never had problems. I don't count that last trip as as my 14th because I never made it inside the country. But I was there 13
go to a
times.
snack bar.
Well, I did put foot on the soil. That was it.
That's right.
Then had to leave. So anyway, Elma's taken a lot of videos. I asked her to take some pictures so that we could share them on the next live stream next Monday night at 8:00. So we'll have some pictures of Cebu, and unfortunately, that will be August 9th. We don't get out of here until August 10th, out of the room. So we'll still be in the hotel room a week from today. But we'll be checking out that next morning. So anyway, let's get into, unless anybody has any questions about traveling to the Philippines, I think everybody will probably get more into that as we go later in the live stream session in the future. But let's go ahead and get into trading. Pat, I got a lot of emails this week, some from some really, really nice guys. One guy, Highwayman, I want to do a shout out to you. Thanks, brother. He basically said, hey, I loved the interviews and really enjoyed everything you said. I'll be watching for future videos and I'll sign on to your channel when it's live. So I sent him back the link, but he said this is really good to talk about stocks in common man terms. He said, I'm a truck driver and I'm going to tell all my friends about you. And I thought, well, that's exactly what I want this channel to be. I do not want this channel to be something where I talk down to people. We're talking about trading stock. And the whole industry has made things really difficult. Pat and I have talked about this a lot. The terminology just is intended to scare people off.
Intimidating.
Yeah, it is. It's intimidating. And it's meant to, keep the financial with the financial people. And, even myself, I've passed the security, the SIE. I've passed the securities exam. It took 3.5 hours to pass that exam. It was very, very intense. Lot of terms, all the different laws and regulations and on how the stock market began and how, the blue laws were put into effect and the blue sky. You had to know, exactly which amendments, affected which different things, which bills, not amendments, but bills affected different things, and all about, good faith and truth in advertising and all that kind of good stuff. And that's something if you want to be a financial advisor, like, I do, and I've passed the exam now. I just need to take the top off exam when I pick which state I'm going to do financial advising in, if I do it anywhere. But I wanted to pass the big SIE exam, and I did. Uh, it made me realize when I went through all that yeah, this is kind of making people feel like they're not sharp enough to do this. That maybe they can't remember all these different terms. And I thought, I think this would be a good niche for me to reach out to people and say, hey, you want to have a part-time job where you can make a few dollars every week? I'm not saying you're going to get rich quick. This is not a get rich quick scheme. Not at all. Not at all. But I've got a lot of students from my Best Buy days who worked for me, and they've done really well. And in a couple weeks, I'll have Kevin Alexander on. Kevin Alexander is 28 years old, got out of school about 4 years ago. He was trading with me in Longview, Texas, and I was teaching him. He's coming over to my house, learning how to do this. And Kevin, now just 4 years out, he shared on his Facebook that his account was worth $1.4 million. Now, I'm not saying everybody's example is going to be like that, but Kevin's saving about $40,000 a year. But he still was able to make that money work for himself and just follow some simple techniques and not get crazy with the risk. But he had a few things go right, like we all did. We all had AMC stock when it jumped. Those kind of things are really helpful. But you don't do this with the idea that I'm going to try to find the next AMC, something that's going to go 20, 30 times up. We're going to do it so that we can kind of make an income for the future. So, Pat, tell me what your goals are for learning how to do calls and puts for your future.
Well, my goal is when I'm retired, I'd like to maybe supplement my income by, $25,000 a year. My goals are the same as yours. I'm going to make it to the Philippines. I got about 8 years to go. And the idea is, between Social Security and you add another 25,000 a year, you are living extremely well over there. In fact, you'd probably be living decent over here. But that's my main objective. I don't want to do anything crazy. I want to do methodical, well thought out investing.
Right. And everybody has a different risk tolerance. Everyone has a different style. So Pat will learn his risk tolerance and he'll learn his style, but he can do it slowly by just doing a few trades at first to get going. So someone just asked, do you need a lot of money to invest in stocks? And the answer is no, depending on what you consider to be a lot of money. Now, the portfolios that I'm going to be sharing with you over the Invest with Rich, we've got almost $2 million in portfolios there. But I am showing folks how they can do this with just $10,000. Now, the very minimum you need is enough to buy 100 shares of stock. And depending on how much the stock is, that's how much you need. So, and give yourself about an extra 10% on top of that to be able to close out your exit strategies. Let's say you buy a $9 stock, ACB, Aurora Cannabis. Aurora Cannabis is currently right about $8. And if you bought 100 shares.
It's nothing you started in our basement either, but go ahead.
No, I didn't start that. I had to do the marijuana stock. And yeah, exactly. $8 times 100 is $800. So the answer is, yeah, you can start out with 800, 900. Now, Tastyworks in Chicago that I use as my online broker, they require at least $500 to open your account. So I guess the minimum amount would be $500. But I would say that the average of what people are using to make some income is about $10,000. I would say that's about the average. I've seen out on the info channels it's anywhere between $5,000 and $10,000. I will show you, folks. I will show you how you take a $500,000 account and you can turn it. We can double that money in 4 to 5 years. At the worst, we may be able to do it in 3 years, but it's definitely going to be some pretty good percentages. We try to get between 15 and 25%. This year, I'm rolling a little bit over 30, and in some of my accounts, I'm actually hitting 40, and in one account, I'm hitting 50. But it actually, with more risk comes more gain, and it depends on how much you want to risk. When I'm in an IRA, I don't want to risk too much in my IRA.
You don't.
No. But when I'm in a cash account, and it's just for me, I'm able to take a little more risk in the cash account. I'm actually able to make better percentages. But I'll show you how to do both. And I'll show you how to exit these programs so that you don't lose as much money. Because I'd like to start off by saying, before we show you these calls and puts that I did for this month, it is all about risk management. You have to have a defensive stand. You know, it's almost like riding a motorcycle. You got to anticipate that somebody's going to hit you and not see you. And that's what's going to happen in the stock market. It's going to hit you on a Tuesday morning when it drops 20% in one morning. And you have to know how to avoid getting killed. And this is exactly the same thing. So you want to be diversified, but you don't want to be so diversified that you spread yourself out to where you really can't keep track of this many different companies. The companies that you work with need to be companies that you're very fluent in. You kind of understand the ebb and flow of the stock going in and out, up and down. They call it at the money when it hasn't moved either way. They call it in the money when the stock is getting profitable. They call it out of the money when it's long ways away. And I'll be a little clear on that. Out of the money means that if I'm 90% out of the money, it means that I have a 90% chance of not hitting that price target. Just as simple as that.
Depending on which side of the trade you're on, it's either a good thing or a bad thing. You pick the side majority of the time when being out of the money is to your advantage, correct?
That's right. So there's actually 4 parts to trading. There's 2 parts of calls and 2 parts of puts. And like Pat said, you pick which one you want. If you're doing a call, you're anticipating that the product is going to go up in stock. It's usually a bullish maneuver. And you're either going to buy or you're going to sell. It's simple as that. On the put side, you're anticipating that it may go down, and you want to buy or sell a put based on the fact that you think it's going to be a little bearish. So does the person on the other side of the table. They think it's going to be a little bearish. So what they're doing is they're hedging. They're buying some insurance to cover. And we'll discuss that in the examples I've got. I've got examples of Twitter, Winnebago, and Xpeng that I'm going to show here in just a moment. This is going to be a 1-hour broadcast, and we're going to spend the last half hour going through the stocks and showing how we set up these calls, we set up the puts, and then we do the execution. Now, I've actually done all 4 of the maneuvers. I've bought some calls, I've sold some calls, I bought some puts, and I sold some puts. And I will show you what that does to affect your transaction. It actually, in some cases, when you're buying, like especially buying puts, you're buying insurance against the price going too far down. And when you're buying a call, you're buying the stock. It's like having a synthetic stock. You didn't really buy the whole share. You didn't pay, like Alibaba's $200 a share right now. You didn't pay 200 times 100, $20,000. You didn't pay $20,000. You paid $700 or $800 to control those 100 shares. And then you were able to sell a call and earn some premium on that. So we won't go from A to Z every single week, but we'll assume that some people have watched the previous videos. And there'll also be other things out on my channel explaining what a call is, what a put is, all the strategies, how the stock market came to be. Got a lot of different videos out there for you to learn by. But in the live stream here, we'll have some fun and go through and share some screens here. So the first thing we're going to do is show you here's the Tastyworks platform. Can you see that fine, Pat?
I'm having a little bit of a hard time because of the size, but that's okay. I'm old and blind, but we'll figure it out.
I could go over here and make it a little bit larger.
Much better.
You can't see the Baba too well over there, but you understand. Here's the company names to the left.
Symbols, yep.
So basically, this is the Tastyworks platform, and you can see that just fine, Pat?
I can see it just fine.
All right. So are you still seeing the Tastyworks platform there?
Absolutely.
All right, good. So first thing we're going to do is on July 20th, we set up a diagonal calendar with Twitter. And here's Twitter right here. Okay. Before this morning, before this morning, I had bought 4 of the August 20th $75 calls for $832. Can you see that, Pat?
Yes, I can.
All right.
And I almost pointed to the screen. How stupid am I?
Yeah, there you go. Get your white out and white out your little notes on there.
That's right.
Yeah. At the same time on July 20th, I sold a August 6th $75 call for $676 in premium. Now, you don't see that now because what I did was I rolled it. I rolled it from August 6th. I did this morning, and I put it in for August 20th. I bought out the other, see these 4 here? I bought out the 4 August 6th for $75, and I made $676. Now, I had to pay a little bit to get out of the obligation, so I paid $54 to get out of the obligation, but ended up making about $614. Now, today, I rolled that by buying out my obligation for August 6th because it's only August 2nd. Follow me on that, Pat?
Yeah. Yes.
Okay, today's August 2nd. I had an August 6th obligation in there, right? Now, who am I obligated to, Pat?
You got the call. You're obligated to buy. Is that correct? To somebody on the other side of the table?
I bought the call, so I'm obligated to sell him this stock.
Oh, got it. I apologize.
Yeah.
So, yeah.
At 70, if I sell, I obligated to sell him this stock at 73 if it hits 73. Correct. So how much premium did he pay me to get that privilege, but not the obligation to buy that stock at $73? Even though it's 69 right now, he's got till August 20th for it to go to 73. He gave me some money for that privilege to be able to buy that stock. How much does it look like?
I'm losing your cursor, but is it $469?
That's right.
Yep.
That's right. $469. Now, as we were just talking about, the person on the other side of the table who I sold this obligation to, they bought it. They said, "Yeah, I'll buy this stock later if it hits 73, and I'll pay you $469." Well, after this morning, after the market closed, if you see the number to the right, the $392, that's how much I can buy myself out of the obligation. So I have a contract with somebody on the other side of the table who my broker found. I made a bid. I said, "Would you give me $469?" They agreed. I made a bid with somebody on the other side of the table who agreed to take this transaction. So it's always a bid and an ask, and that's the way the market is set up. You send out a bid. You ask them, "Hey, anybody interested in this?" They come back with mine's the ask. I send out an ask. They come back with a bid. So I ask for 472. They come back with 465. I come back to another ask of 469, and then they agreed. And so they go ahead and accept the offer, put it in through the broker. The broker puts it into my account. I get the $469 into my checking account this morning. So the 469 showed up in my checking account. I bought myself out of the previous one, which was 676. It was in there for 2 weeks, and I had to pay about $58 to get out of it. The other person took $58 and ran because they didn't think they were going to get to 75 because it was 75 before.
So they got
this
something.
This time there's less time. We're only looking at August 20th, and it's for $73 because the stock actually fell $5 when I first bought it. I mean, the ultimate oops, they got me type thing. It fell $5. So I had to keep working back. And if you look at how much I still am behind, the $588 negative number over there is how much I'm behind on my synthetic ownership of this stock. And I'm making $496 on it if I can keep it all the way till August 20th and keep it under $73. That won't quite cover the $588. But what did I just do the previous 2 weeks, Pat?
Well, what you're going to do, I'm thinking you're going to wait for that time to pass, and that 392 for you to buy out is going to go down. So more of that 469 is going to end up hopefully in your pocket.
it'll stay in my pocket. Yeah, it's in my pocket right now,
Right.
and I'm not going to sell out. Like Pat said, I'm going to wait for this to go down, and that's called time value. This whole transaction is all based on time value. You're working against the clock. As soon as you set an obligation up and a contract with the other person, the clock is ticking. And the closer we get to the expiration date, the faster this 392 will drop down to zero. Now, what I did before over here, you see our next call is August 20th. My previous call that you don't see on the screen right now is August 6th. And I made $618. So you take the $618 with the obligation buyout and the $469, you come up about $1,100, right? So that $1,100 in premium profit is what this is all about. Try to make as many premiums while you own the stock. That's it. That's the whole strategy, the whole program. Now, there's a whole bunch of different ways to do it, but here's the most important thing. Can you guess which way the stock is going to go? And if you don't guess the right way, like I didn't here, it went down drastically on me. It went from $72 down to about $66, and now it's back up to $69, so it's making a comeback. But if it can get back up to about 72, I bought this stock with a 75 call, which means I can buy it at 75. But when I purchased it, it was at 72, so I could get a good price on it. I'm working with the stock time value of the August 20th. I'm going to hold on to it until the 20th, and that is going to keep raising. This 244, the actual intrinsic value, the time value that's built into this transaction will start going up because now the other person recognizes that this is not going to exactly work out the best for them. Or it's going to stay down there at 69, and I'll end up with $244 on an $832 investment. I'll lose $588 on the stock, but I'll make $469 plus 618, so I'll make $1,100 on the actual premiums. So you take $1,100 in premiums, Pat, and you subtract the $588 loss on the stock because I picked the wrong way that darn stock was going to go. You still end up with about $500.
Right, exactly.
Exactly. How much did I invest in this transaction in the beginning?
Oh, this is a test, $832?
Right.
Mm-hmm.
So if you're going to keep something for 45 days, July 20th, well, actually 30 days, July 20th to August 20th, and make $500 for every 832 invested, wouldn't you do that all the time?
Yeah, you would. Exactly.
Exactly. But here's the real caveat to all this. You kind of know there's a lot of different factors, and we'll go over this over the next year or so as we're learning how to trade these stocks. You got to know the volatility. There's a lot more to this than just picking a stock and picking a call or a put and then, hoping that you pick the right one. You got to do your due diligence. You got to kind of know your stocks. I even get some help from a trading firm that I use. We look at different setups that I may not have looked at before. And, I try to get as many of these that I can actually make $500 on an $800 investment and get my $800 back plus $500 more. In this particular situation, if I can get it back up to 832, then I can get my whole 832 back and still make the $1,100. An $1,100 investment on an 832 is even better.
It's even better. So statistically, what are the chances of that happening?
A lot. Very, very well. Because I do think it'll get back up to 72. It's already gone up $4 in 3 days. It just hit me hard when the 21st and 22nd of July, it was just, here it goes, nosedive. Like, what's wrong with Twitter? But do I feel like Twitter's going to be around next month?
Probably.
Sure. Yeah, probably. Do I think it's going down to zero? No. But if it does go down to zero, how much do I lose? $832. How much do I make? $1,100.
Yeah.
So if it goes down to zero, I still make $300.
Right.
So that's why you want to make sure you have a setup. That's the key. Setting it up, picking your risk tolerance, and then watching the amount of inside value. They call it intrinsic value. Extrinsic value. How much is built into that darn thing? And watch that thing go down as you get closer to the end of the day. So we rolled it out to the 20th. The worst case scenario on the ROI, I ran this on another report that I'm looking at that you don't see up on the screen right now, but the worst case scenario is a 367% return on investment, which is 30% for 1 month. The best case is I'm going to make the 252 plus whatever I made on the purchase of the August 20th call. I could end up quadrupling my profits, and we'll just see. We'll see by August 20th how this shakes out.
Mm-hmm.
The next thing I wanted to show you was XPing. So we'll close this one. Just hit the little arrow key there and go down to XPEV and see if I got any orders out there. I don't. All right. So on the XPing, I got a lot of junk going on in here, but I just want to kind of just take a visual of how much stuff is there. Okay. And the first thing you're going to say is, oh my gosh, that's a lot of gyrations. What are you doing? Well, I'm going to break each line down for you and just kind of show you, because I do have a lot of stuff going on with this. So what do I have going on with XPing? Well, with XPing on August 2nd, today, I have 6 diagonals in there, which is where I bought a synthetic stock to cover the 6 sells of the calls that I did. I have 3 covered calls where I sold 3 calls and covered that with full shares of stock. And then I did 10 puts at $40 and 40.5. And then I did 6 puts at 37. And with each one of those, I covered them with insurance so that I wouldn't take too much loss if it went way below $40 or went way below $37. So with all these total obligations out there, the total profit right now, August 2nd, shows $39.50 to the negative. It says I will lose $39.50. Now, I didn't just set these up to go ahead and lose money right off the bat. And the product has gone up in price. So why is it a negative? Well, it's a negative because there's a lot of time value baked into these obligations. Once you make a deal with somebody, the moment you make it, they're not going to let you out of this obligation in the first week as a break even. Oh, I paid you $100, you pay me back $100, we'll call it even. Nope, doesn't work that way. They paid you $100, they want $150 to let you out of it because they see the product's going up. And when it's going up, that means they might get to buy it at that future date that you both agreed on, at that future price that you both agreed on. And they think they're going to get there. So they want to charge you more to get out of it. And that's why my obligation is a lot higher than what I paid for it, because we're not even close to the date of August 20th that I set on some of these. Now, all these are set for August 6th. So we are going to get there this Friday. And I'm going to show you, we're going to go line for line. I'll show you how we're going to execute these. So the total potential for profit on these transactions is $914. Now, as I said, you're not going to get rich, but you're going to make $900 here. You're going to make $500 there. You're going to make, we got a Winnebago example next where we made $160. This is how you do this every week. And depending on how many different stocks you're able to own or how much you want to use options to make synthetic stocks, then totally up to you on your risk value. So let's just do a real quick, what did Rich do with these August 6th expirations? So this is XPeng, which is a Chinese car maker. And it finished today at 43.39, which is great because, my goodness, it was 41.50, something like that. So it went up almost $2 today. Fantastic. I've got a call in there at 55. Now 43, I put the thing way out there. When I say way out there, I mean 90% out of the money. When I first set it up, it was sitting at about $41. And I said, you know what? I'm going to put it out there at 55. I want to be 90% out of the money. I don't want to have any chance of it hitting it. Well, there's always a chance, right? 10%. 90% of the time, it's not going to hit it. So I didn't earn that much off this. I earned, here's where I bought. I bought a synthetic stock for $96. And It's way down from what that was. That's kind of normal. That's going to bounce closer to 96 as we get towards the end of the week. But here's where this is how much money I made off the call. So I made 6 calls, made $180. Right now, if I wanted to get out of the obligation and jump out of it here on tomorrow morning on August 3rd, I could jump out at $72 and still make $108. Can you see that, Pat?
I do. And so basically when you're saying that it's, 90 some percent out of the money, what you're saying is you sold this call that there's a 90% chance that it's not going to go to that price, which means there's a 90% chance that the money that the person paid you for that premium, you're not going to have to pay any of that back to get out of it, or the stock is not going to go to that price. So, you have to sell in stock.
Right. So if everybody who's watching this watched my little purple finger, my hand here, as Pat was explaining that, I was putting the cursor underneath each one of those numbers. Pat is exactly correct. He's exactly correct. So
mark it down. It happened once.
Yeah, there you go. You got that one. We sold 6 contracts with a $50 strike, which is the price we agreed to sell to them for at $50. We agreed to sell them 6 of them on August 6th if it hits $50 or anything over that. It's currently at $43.39. As Pat said, they gave us $180 as their premium for being able to do this transaction with us. They're hoping this thing goes to $52, $55 and they can make some quick, easy money. Does that mean we lose money? No, not necessarily. It means that we lost opportunity to make money. Kind of a difference there, and it's the way you got to think as a trader. I'm willing to maximize my profit at 50 because I'm the one that gets to pick the price. And as long as it doesn't go above 50, I get to keep the whole premium. And then I can go do it again, rinse and repeat, go make some more money the next week or two. So, as Pat said, as the last line he was talking about, you can pay $72 to get out of the obligation, which would leave you with a $108 profit on this particular line. The next line is a put, the opposite of a call. So here, I have sold for August 6th, which is 4 days from now, I have sold the opportunity to buy this stock at $40.50. It's currently at 43. So I sold the put, which is my opportunity to buy this stock at $40.50.
Yep.
Yeah, 40.5. Now I'll do that every now and then, especially when I'm wanting to buy some stock because I want to get it cheaper than what it currently is. So I'll put a couple puts out there for maybe 2 weeks or 4 weeks. I may put a couple different ones out there and try to, see if I can catch it going down. And there's an old saying here in the stock market: don't catch a falling knife. We don't want to catch that falling knife when it's going from 43 down to 30. But I felt pretty comfortable that 40.5 might be a good price to buy this stock at. So I went ahead and bought 10 contracts, and they paid me $990. Now, why would they pay me $990? Now, this is a trick question, Pat. I'm not going to ask you the question.
Well, I'm thinking is they're paying you because that's their insurance. If it goes down, they can unload it. That's
exactly right. That is exactly right. Good job, Pat. You got 2 for 2. Then you're on a roll with these 2 examples. You got them both right. Yeah, somebody might feel like this thing's going to drop, and they want to go ahead and be able. They might think it's going to drop down to 35, but they're not quite sure. So with 10 contracts, the difference between 40 and 35, that's $500 times 10. That's $5,000. They're willing to give me $990 now for the right to not lose $5,000 later by August 6th. That is the transaction on this put.
So the key for you is that's why it's so important that you get to know these stocks and understand the volatility of them. Because
absolutely.
If you don't
know the trends, the 30, the 60, the 120 day, the 6 month, know the trends, know the management, know what kind of government regulations are happening. Like right now, the Chinese government is is cracking down on the educational sector. They're cracking down on the IPOs on the small companies. That's causing those type of crackdowns with the Chinese government regulations to cause these stocks to go up and down tremendously. Alibaba's down like 50%. It was 325, now it's down to 200. It'll come back. Xpeng was about $55 just a couple months ago. Now it's at 43. It'll come back. But this channel is not designed to tell you which stocks to buy. I'm not trying to, have the crystal ball and tell you what's going to come. I'm just looking at over the past years. I've watched these stocks and I've followed them, and I've followed them going up and down, and I kind of have a feeling for where their support is at the bottom of their candlesticks and where they're topping out when they actually do. So when they top out and they get to be too darn expensive, I'll sell them. When they get to be too far below what I paid for them, then I don't put calls on them. I wait, and I wait for that to come back up to where they're callable again. So right now, if I wanted to get out of this obligation of these 10 contracts for this Friday at 40.5 that I made $990 on, Pat, how much would I have to pay to get out of the obligation?
$445. So you're still $545 ahead.
That's right. So what I did on the next line, so we're just going to go right down all these lines. I'm going to explain what we did. On August 6th, we bought a 38.5, excuse me. Yeah, we bought a 38.5. So what that was I bought insurance. I actually bought the stocks for 38.5. And that's going to keep going down to zero. The closer I get to Friday, that 550 is going to get down to, I would have lost all $550. So because I only bought this stock to be good through August 6th, right now it's only worth $175. So if I were to get out of this, you'd take the 545 from the 375, and I would make $150, right? Or $165, $160.
Right.
$170, Rich. Get your math together here. Yeah, $170. I'd make $170 right now if I wanted to get out of it. I'm not going to. I'll go ahead and let this 550 go down to zero, and I'll let this 445 evaporate by Friday, and it'll go up to 990. So I'll end up making 990 minus 550. So I'll end up making $440 as long as this stock stays above 40.5. But this is my insurance just in case that falling knife drops to 30. I don't want to lose any more money than 38.5 because the difference between these two is $2. $2 times 100.
So what you did is you put that 38.5 in there. So you've already got a buyer lined up in case this thing goes to the basement.
That's right.
Okay.
That's right. Now, what am I going to lose on that if it happens? I'm going to lose $2,000. So it's $2, 40.5 to 38.5, $2. I'm going to lose $2 times 10 times 100. So I'm going to lose $2,000 if it goes below 38.5. If it goes below 40.5 and ends up at 39, I'll be somewhere in the middle. I'll be like $1,000 loss. But how much did I make? $990. So I've got some play money here. I got house money to work with. And as long as this stays above 43.39, and over here, Tastyworks is saying you got about an 87% chance that's going to happen. So I'm feeling pretty good. Tastyworks feels pretty good about it. You got some numbers to back up what you're looking at. And basically what they're saying is there's a 5% chance that you're going to make money on this thing going below 38.5 because it's probably not going to happen. It's because I did buy it. And I couldn't make some money. If this thing drops, it's going to help offset this. But that's a little too technical for today's class.
Well, and so when you say, it's essentially saying there's a 5% chance that stock is going to go down to 38.5.
Right.
And when you use the term insurance,
there's an 87% chance because there's a negative number over here. 87% chance that it's going to stay above 40.5. 5% chance because it's got a positive that it's going to go below 38.5. Okay. So I'll go a little quicker here, and then we'll finish up with Winnebago. Same deal as this one, just at a different amount. And I'll do that because I want to lower my risk on a few of my setups here. So same date, August 6th, this Friday, I put a 37 put out there. So what's the chances that it's going to get to and stay above 37? Right?
Almost 100.
Yeah, 99. Yeah, they never put 100 on anything. They're like lawyers, they won't ever put 100 on anything. But 99% means you got a pretty good chance that's not going to ever hit that. And so the person on the other side of the table is saying, hey, I'll take $57 if you'll get, if you want to get out of this, I'll give you, give me $57 and we'll get out of this. I already paid you $906. So you'll get to clear $849. But I put insurance in there at 36. I only did a $1 difference here, which $1 is $100 times 6. The most I could have lost on this was $600. I've already made $849, but I went ahead and bought the insurance, and that cost me so far $649. So right now, $849, you're looking at about $175 in profit. If I wait till Friday, it's going to be closer to $200 in profit because it'll work out to be these two numbers here, 906 from 714. What I usually like to look at is if I can get it to about 10%, then I'll usually close out the transaction early and go use my money for something else. So I can buy it back for 57. I got it at 906. That's obviously only about 6 or 7%. It's definitely less than 10. I could get out of it. At this point, I'm lazy and I haven't thought about anything I want to invest in tomorrow. So I'm going to leave it there and just keep collecting the money until I decide to reload and go do another stock. So what do I have down here? Well, I have a whole bunch of Xpings that I purchased that I don't have any calls on. So the reason why I don't have the calls on it is because I'm waiting for the stock it's running up fast, and I don't like to put calls on something when it's running up really quick because I've had the unpleasant experience of sticking a 45 out there and it goes from 43 to 48 real quick, and I lost my opportunity. So I do kind of know the ebb and flow of Xping. I have no claim to fame of being able to pick any stock on which way it's going to go. I couldn't tell you if this is going to go down $1 tomorrow, if it's going to go up $1 tomorrow. I do read all the things I can read out there. I use Yahoo Finance and I use Barron's and Motley Fool, and I just I've got about 6 different spreadsheets I look at with different people. We talk about it in chat rooms. You just got to be a part of the company and kind of get the feel. So this is not telling you which stock to buy. This is telling you to go out and do your due diligence and learn how to do it. So basically, all these are not covered. So there's the only one that is covered is this one right here, which happens to be a synthetic stock that I purchased and put a sell against. The rest of them, I do have 3. I take that back. There's 3. August 6th for 47. I'm making $198. It cost me $111 to get out of it. I'd make $87 today if I wanted to get out of it. But I have 3 that are being covered by all these positives down here. Positive 3, 7, 8, 10, 11, 14, 20, 23, 24, 25. I have 25 lots of 100, so I have about 2,500 shares of stock, and I've only written a call on 3 of them, which would be 300 shares. Okay, last one, because we're over our hour by just a couple minutes.
Last one. Get that.
Yeah. So Winnebago, very interesting enough. Look at my notes here. I sold 2 of the August 20 cash secured puts for $280. And then I bought August 20th 55 puts for insurance. And I did this all on July 14th. Now you can't see that on my Tastywear screen because you got to go back into activity and look at your transactions. But I looked it up to see, when was it that I did buy this thing? So I bought it on the 14th. So my total profit potential is $180. It's worth $160 on August 2nd. And that was when I made my notes. I think right now, when the market closed, I think it's worth $170 now. Let's go look. I'll close the Xping. Let's look. How much is it worth? Okay. It was worth $180 because I started out with $280 and I put some insurance on it for 100, so it was worth 180. That's what I was trying to make. Now it's getting so close to August 20th, which to me it's not that close. I mean, we're talking 18 days out. See the 18 over here? Yeah, we got 18 days, and I can get out of this for $10. Well, absolutely. So what I did was that was on two of them. Pay 5 cents, you can get out for $10. I went ahead and put an order in for it. I'm going to go ahead and close it out.
And the reason you're doing that is you've got so much time. Even if it goes all the way to zero, you're only making a little bit of money. So you're going to get that money out, move it to something else, and make more profit in that same amount of time.
Right. So now, yesterday I would have made 180. Today I'm going to make 190 because it even went higher, and I put it farther away from the $60 put. So now I'm $12 away from the $60 put. They're giving up. They're saying, time out. Give us $20 back and we'll be happy. And on the insurance, they're saying, we'll give you $30 because basically it's the opposite of the sell. You bought it. So it comes out to a $10 profit, $10 debit on my end off of my one. I'm going to make a $10 profit because it's gone so far out. On top of the 180, it's going to be worth $190. So I went ahead and I put that in. And the reason why I originally did this was I wanted to explain that I'll go ahead and exit this trade and make my $190. There's no need to risk and keep this for another 18 days for an extra $10, right? It's like you said, Pat. Let's take our money and go somewhere else with it. Now, when you do a put like this and you do it insured, it's normally a 3-to-1, maybe a 4-to-1 ratio. So for me to make $200, I had to put about $800 up as collateral. And on that $800, even though you see the 280 and the 100, you're thinking, oh, he only put $280 up. No, I actually had to put up collateral. In case this thing did go below 60, but not any lower than 55, I had to put up enough collateral to cover that. And then they don't actually make me pay the whole amount. That'd be $5 times 2, right? That'd be $10 times 100, right? 5 times 100, 500 times 2, be $1,000. They actually made me put up about $800. So if I can make $190 once a month for a cash secured put, that's what this is called. The cash secured put can make 190. Let's call it 200 on an 800. That's a 1-to-4 ratio. The way I look at it, you're making 25% profit. If you can make 25% profit every month, month in, month out, you're going to make a 300% return on investment for the year. Now, am I saying that this happens all the time? No. But do I know Winnebago pretty well? Yes. And we have been watching this stock go up, go down. When I bought this put, it had crashed. And it had crashed pretty good. It was down to about 62. So I put it in at 60 and then waited for it to go up. And it did. It went up and it got up to 72. Now so far out, they're giving up way early on this transaction. Wow. Yeah, you don't normally see this. They normally let you sweat it out until about the last week. But when you get into the 2 days before, like August 18th to August 20th, then that buyout gets very small, and you're able to close these things out usually before you get the expiration date, which is that Friday, August 20th at 3 o'clock. The experts will tell you that most of these transactions, about 75%, get cleared out before they actually get to expiration. I tend to wait for a lot of things to get to expiration if they have more than 10% in them. Tastyworks always talks about 50% of profit. Get out of it. Once you've hit 50% of your profit, get out of it. If you can buy back the obligation and still make 50%, get out of it. They say trade often. Trade small, trade often. I agree with trade small. Never make depending on how big your portfolio is, never let it be more than 3 to 5%. If your portfolio is only, $2,000, you got to be more careful than if it's $100,000. But I always say my average is about a 1.5% of my total portfolio on any particular transaction. So I don't know whether stocks are going to drop or whether they're going to fall or whether this thing's going to be a great deal or not. Because even though Winnebago says right here that there's a 99% chance that it won't hit 60 by August 20th, there's always that 1% chance that it will. And it seems like with my luck sometimes, I've seen it happen. And I do buy myself out a lot before we get to the end. But if you looked at me compared to most traders, I am probably at about the 75 to 80% range. When I hit 75, 80% of profit, that's what my average is when I buy myself out. And if they hold on to that obligation way too long and they wait till 2 days before it's going to expire, then I say to heck with it. I'm just going to leave it in there and let it expire down to zero, and I'll keep 100% of it. So that's the kind of things we'll talk about with Trading with Rich. And it's the kind of stuff that I find to be extremely interesting. And I hope that people ask a lot of questions. And when they watch these videos, I understand live streams take a while to get going, but they can watch these recordings and even come back to me and put comments down on the live stream after it's done.
Yep.
Please put the comments on there. I'm reading them. I'm responding to them. This channel is new. It's Trading with Rich. And I want to thank Pat here, my brother-in-law, for being on the channel with us. Any final thoughts you have, Pat?
No, just really, I mean, you've been talking to me about this for a couple of years, and I would kind of drool. It's like, huh, what? Not really understand. And then it starts to click, and it's really not that super complicated. It just takes the maintenance. You got to make sure you know your stocks, and you kind of learn it. You get an itch for it.
Yeah. And like I said, it's basically four things: buy or sell a call, buy or sell a put.
Yeah.
Now, the most important thing is understand the companies you're dealing with. And Pat obviously got, we were quizzing him there. Didn't mean to turn this into an exam time for him, but yeah, you got all the answers correct. And it's not rocket science, but with all the moving parts, you got to feel comfortable and you got to make a few trades. Start small, do a few trades. After about 3 or 4 months, you're going to feel really comfortable with it. And then after about 6 months, you'll get even more. It takes about a year to get anywhere close to being, an expert. And I would say even as long as I've been doing this, I started back in the 80s with E-Trade, and then I let off for about 15 years. So busy working, really didn't have a lot of time to do these type of things. But I got started again about 4 years ago, and just even after 4 years, I'm learning something all the time.
Oh yeah, the evolution of your strategy is amazing.
Yeah, and it's always changing. That's one thing I would say. It's always going to be changing, and you got to be flexible, and you have to have the discipline to stick with your strategy, but understand that sometimes you got to change the game plan a little bit. And anyway, it's time to get off. I want to say thank you to everybody who's watched and all the future people that would be watching in the future. Please leave your comments, hit the like button, and subscribe to Trading with Rich. I'm here to help anybody and everybody as best I can. My email is tradingwithrich@yahoo.com. Can't get any easier than that. I keep using the same logo. Tradingwithrich@yahoo.com.
Bye.
See you later. Have a great week.
Bye.
Pat, stay on, please.
Okay.
Thank you for subscribing.
Did I lose you?
And myself.
There you go. Are we off now?
Yeah, I turned everything off, then turned it back on. Whoops. Hold on.